Hello people, a very happy evening to all of you. So guys, we started with a brand new topic in the last class, which was fundamentals of partnership. So let's do a quick recap. So guys, we understood that in India, if you have to do any business, it has to have a form or a organization or a body. So there are various forms in which you can do business. The first one being sole proprietorship concern, then partnership, then LLP, then companies, then HUF, so on and so forth. Now in 11th standard, we understood the concept of a sole proprietorship concern. In that, we understood there is certain constraints where people are not comfortable to continue as a sole business. So they look up to form a partnership. So partnership is basically where two or more people, minimum two or more people, join hands together with the intention to do business so that they can reap profit out of it. And the business can be managed by all of them or any one of them acting for all. So this is partnership. I told you in the last class, the question could come in two different ways. They will tell you define partnership. In that case, you will not change even a single letter. You will write this as it is. If they ask you what is the meaning of partnership, you are free to write it in your own language. But in that, please ensure there are certain keywords that you need to mention in that. So without deviating from that, you have to write. We understood that all the persons are individually called. All the owners are individually called as partners, and they're collectively called as firm, and the firm has to be given a name called as a firm name. Okay, what is the liability of a partner? 2 points I said: unlimited liability, second, jointly and severally liable. So 2 points: unlimited liability, and the partners are jointly and severally liable. So I gave an example that, let's say this is the balance sheet of that particular firm. All the assets put together is, let's suppose, 20 lakh. Capital is 5 lakh. Borrowing is 15 lakh. Borrowing is 15 lakh. This is the position of balance sheet. Both the sides tallying. Perfect balance sheet. Super, sir. Now, this is the asset reflecting at the book value. This is the value of the assets that you have captured in your books of accounts. 20 lakh rupees. If you go in the market and sell the assets or convert the assets into cash, will you 100% fetch exactly 20 lakh? There are three possibilities. You can fetch more than 20 lakh, let's say 30 lakh. You can fetch equal to 20 lakh, or you can fetch less than 20 lakh, let's say 12 lakh rupees. Let's say 12 lakh rupees. So anything can happen. On the reality, when you go and sell, no, things could be different. Now let's suppose, assume a scenario where you're trying to sell all the assets of the business. You are able to recover only 12 lakh rupees. How much money? 12 lakh rupees only you are able to recover. So now all these assets put together has become now 12 lakh. So 12 lakh is there in form of cash in bank. So first thing, what will you do? You will settle this banker for the loan what he has given. Banker has given you a loan for 15 lakh rupees. But how much money you have to repay him? Only 12 lakh rupees. So there is a deficit of how much? There's a deficit of 3 lakh rupees. Now, since partnership firm enjoys the status of being called as unlimited liability, this 3 lakh rupees, the banker will go to the extent to recover this money from the individual or private assets of the partners. Jointly, they'll attack. It doesn't mean that you will recover the entire 3 lakh rupees only from one partner. All the partners are jointly responsible and with the same severity. No leniency will be given to anybody. Right? So this 3 lakh rupees, they'll recover from the partner. So why are they going and recovering from the partner? Because the partnership enjoys the status of being called as unlimited liability. So are you clear with this concept?
No.
Now, 1 second, Gana. Now, this 3 lakh rupees, how will we recover from the partner? We'll be studying this concept in the last chapter of your partnership series. That is when I do resolution. There is one small concept which they'll touch upon, this recovery of the 3 lakh rupees. So that time I'll give you an in-depth clarity. Now, yes, somebody online called me. If you have doubts here.
Sir, so this 3 lakh, it would be divided in the profit loss sharing ratio, right?
Yes, in whatever ratio. If there is no other ratio given, then you will distribute this into profit sharing ratio. Or else, by taking the loan, you'd have signed an agreement between the partners saying that upon repayment, if there is any deficit, and if the bankers come to us for recovery, then it will be recovered in this ratio. Like that, if a specific ratio is agreed between the partners, then they'll go with a specific ratio. If nothing is agreed, then the profit sharing ratio has to be taken into consideration. Okay, have I answered your query, Gana?
Yes, sir. Thank you.
Wonderful. Now, guys, essential features and characteristics of partnership. So we discussed a couple of points here that in a partnership concern, there are minimum how many partners? Minimum 2. Maximum 50. This maximum limit is given under Indian Partnership Act 1932. The answer is no. It is not mentioned there. So Companies Act was forced, to mention this point here. So they gave an empowerment to whom? Central government, that the maximum limit that you can set is 100. In that, central government has approved a limit of 50 maximum. So as of now, in today's scenario, if anybody wants to form a partnership concern, the maximum partners that they're allowed to form is only 50 partners, nothing beyond that. Then next point. Every person in India is capable to enter into contract, except 2 people. Who are those 2 people? A mental, you cannot say in the exam, no? A mental cannot be allowed. You have to talk in a polished manner. You cannot say that mental is not allowed here. No, you have to use the proper polished word. Mental is called as a person of unsound mind. Unsound mind. Second, person disqualified by law. These 2 people are not competent to contract. Fantastic. Can a minor be admitted to a partnership concern? Yes, he can be added for the benefit of the partnership. If there is a benefit in adding that fellow, then it can be added. But you have to ensure that he only takes profit. If the firm is into profitability, he will take profit. But if the firm is into loss, you cannot put the burden of the loss on the minor party. Clear with this point? Okay. Agreement and registration. These are the 2 important points I discussed. Agreement means what? The terms and conditions you have to agree upon. That is called as agreement. Agreement has to compulsory be only in writing. True and false? False. It can be either oral or it can be in writing. Both acceptable. But agreement has to be there. Registration means what? Registering that agreement with government is called as registration. Is that compulsory? That is not compulsory. That is optional. Wonderful. Now the business what is starting partnership concern, it has to be for legal purpose. It has to be for legal purpose. Illegal business you cannot form. Second, it should be for doing a profitable business. You cannot say that I'll do a charitable work in this partnership. Charitable work is not allowed in the partnership. If you want to form a charitable organization, it has to be in form of either society or trust. Wonderful. Profit sharing ratio should be agreed in the partnership deed. Now we'll discuss today, if in case in profit sharing ratio is not captured in the deed, what will be the consequences? That I'll discuss today. Then agreement what you form shall be for 3 purposes. It could be for a specific venture. That is, upon accomplishing that venture, the partnership has to be dissolved. Or the partnership could be for a specific period, let's say for 5 years. Then at the end of 5th year, automatically the business has to be dissolved. If you don't want the business to dissolve, then you have to cancel the old deed and execute a new deed for extension purpose. If you're not clear, then you will create the partnership at will. So whenever you want, or as long as you want, you'll continue. And whenever you want, you will close it down. So that is called as partnership at will. So I discussed 2 concepts in the last class, agent and principal. Agent is a person who does all the work on behalf of the firm. On behalf of the firm. The person who is working is called as agent. And the person for whom is working is called as a principal. So principal is technically the owner. Agent is basically the worker. Yes. I can do that. Now, क्या हुआ? 18 में रखा. Flow चला जाएगा बेटा. 2 minutes. What I was telling? We were discussing about agent and principal. So now agent, we discussed that one partner will do the work on behalf of all the other partners. Now that one partner is doing some work. The other partners, can I say no, will not be liable? Agent is doing one work. That is one of the partners out of A, B, and C. Let's suppose A is doing all the work. He's signing all the contracts. He's making all the business deals. So can B and C say that no, we will not be binding by the act of A? Can they say? Not possible. So agent is doing the work on behalf of principal. So whatever work agent does, whatever work any partner does, every partner will be equally responsible for that work. So agent, whatever work they do, it will have the binding effect on all the partners. So till this we've discussed in the last class. So today we'll be moving to the next segment. What are the rights of a partners? every partner has right to participate in the management of the business. A, B, C are 3 partners. You know what is meaning of management? To do the day-to-day operations of the business. Every partner is given equal responsibility of managing the business. If anybody wants to restrict anybody's right, you have to agree that point in the partnership deed itself. For example, AB doesn't want, guys, listen very carefully. AB doesn't want C to participate in management. If that is the case, AB should ensure that this point is mentioned in the partnership deed, saying that C, you will not be allowed to interfere in the management. Like that, there should be a point mentioned where in the partnership deed, and to which if C also signs and agrees, then C cannot participate. But in agreement, you did not capture anything. In that case, every partner has got equal right for management. Yes.
What if there's no partnership deed, like it's oral?
That's what. If partnership deed is not there, if it is oral, nothing is agreed with regard to management, all the partners will have right to manage. Clear? No? Point number 2. Every partner has a right to be consulted about the business matters. Let's suppose A, B are 2 very close friends. These 2 people are discussing and making the business deals, and they are not informing C at all. Is it right? No. Though A and B could be a good friend, but when it comes to business, all the 3 has to be treated equally. So if A and B are making any decisions, it has to be consulted with C. Should we proceed or not proceed? This is the right of the C. If you don't want C to be consulted, then you should mention a point in agreement saying that C, whenever we make any decisions, that is A and B, whenever we make any decisions, you will not be consulted. And to which if C signs and agrees, then need not consult. But if nothing is agreed in the partnership deed, C also has to be consulted. Logically correct only. Online people, do you agree with me?
Yes, sir.
Yes, sir.
Every partner has right to inspect the books of accounts and have a copy of it. Books of accounts is a place where you do the accounting. See, in every business, it's not necessary that a person should be knowing accounting. Let's suppose we are into a software developing business. So there'll be 2 core person will be managing the software and operations part. And 1 person could be like me, a CA, who could be doing the accounting and the financing of the business. So I'll have all the knowledge of accounting and finance. The other person may not have. So he might want to take a copy of this and check with his private auditor whether whatever I did is right or wrong. So all the partners have right to inspect the books of accounts and take a copy of it.
So, but then if there's anything wrong and we incur a loss or something, even C will have to pay.
That is not the point here. The point here is that I am preparing the accounts. I cannot say the other 2 partners that no, you cannot check this accounts. You cannot take a copy of that. I cannot restrict it. That is what this point is. So if nothing is mentioned in the agreement otherwise, every partner has got equal right to check the accounts. And if he wants to take a copy of that, he cannot be denied. He has to be given a copy of the books of accounts. For example, he wants to print out of all the ledgers. He wants the printout of balance sheet. He wants the printout of P&L. He has a right to take all that. If you want any partner not to take it, then you have to mention that in agreement. That see, you are not allowed to take any copy. You are not allowed to inspect the accounts. Like that, you have to agree in the partnership deed, and to which C also has to agree and sign for it. If C is agreeing, then C cannot get any right. But if nothing is mentioned in the agreement, C has to get the right to inspect the books of accounts. 4th one, every partner has right to share the profit and losses in the agreed ratio. Correct, no? Profit ratio is there. In what ratio profit you distribute? In the same ratio you distribute loss also. In case of profit sharing ratio is not agreed. In case profit sharing ratio is not agreed. For example, you create a partnership deed, but you forgot to mention what will be the profit sharing ratio. In that case, the Indian Partnership Act 1932 says that the profits will be distributed equally. Very important point. I'll be elaborating on this point. Very soon. Give me just 10 minutes. Like this, we have 5 more important points. Very, very important from the examination point of view. So as of now, just put it in your mind that if there is an oral agreement or partnership deed is there, but they forgot to mention about the profit sharing ratio. In that case, the profit will be distributed equally. 5th one, if a partner has advanced loan, he has a right to receive interest. If a partner has advance means what? Give. If partner has given loan to whom? Firm. He's given loan to firm. Partner is giving loan to firm. So firm in return have to pay what? Interest. So he means the partner has right to receive the interest at an agreed rate of interest. So when the partner is giving loan to the firm will agree, okay, for this loan, I'll pay you 10% interest. I'll pay you 12% interest. So whatever interest rate is agreed, the partner has to get that interest. So let's suppose you give me 10 lakh rupees of loan. I tell you that, okay, I'll pay you 12%. But instead, if I'm paying only 10%, will you agree? That will be wrong. So whatever is agreed, you have to pay. Now, in case, let's take an example. You have given a loan or a partner has given loan to the firm. They forgot to discuss the interest rate. I mean, they discussed the interest rate orally, but they forgot to capture it in the agreement. Human being, no, we forget. So that fellow forgot to document that percentage in the agreement. Now, orally they discussed that 10% will receive. But in document, they forgot to mention it. The firm is not paying. Firm is not paying interest. Firm says, I have not paid interest. Where did we agree? Where is it in writing show? The partner says, no, you have to give me 10%. Both of them are fighting. So partner is asking 10% as orally agreed. Firm is saying, no, I'm not paying you because we never agreed. Orally, we can always change the topics. No. Now they go to the court. What will court say? Court will first refer Indian Partnership Act. Is Act saying anything specific? They will check. So here, Indian Partnership Act 1930 is very clearly mentioned that if any loan is given by partner to the firm, loan given by partner to the firm, interest rate is agreed, but not documented anywhere in the agreement. And if there is a fighting between both of them, in that case, the firm has to give minimum 6%. This is given in law. In case the rate of interest is not agreed, interest is paid at the rate provided in the Indian Partnership Act 1932, which is 6%. Which means the partner who's given loan, he agreed at 10%. But if he wants the 10%, he should have got it documented in the agreement. Since he did not get it documented, he's suffering a loss of 4% now. You're getting this point? So interest given by whom? Partner to firm. I did not say firm to partner. The 6% applicable for what? Loan given by partner to the firm, not reverse. So now here they'll take this question and give you an MCQ. That loan given by firm to partner. Interest rate is following percentage. They'll give 4 options: 5%, 6%, 8%, not applicable. Not applicable. Because for reverse, interest will not be paid. That is, if firm gives loan to the partner, and if interest rate is not agreed, no interest. So that's why I'm focusing and stressing upon the word that this 6% is for whom? Loan given by partner to firm, not firm to partner. For Ulta, it is 0%. For partner to firm is 6%. Yes, boss.
So the loan given by the partner to the firm, will the profits of firm give the money back to the partner?
Obviously, no. You will give from your earning only, no.
Or the partner, or the remaining partners. They cannot use their life.
No. Okay. Now Bhavanji is asking, sir, partner is giving loan to the firm. So firm will have to pay interest. So this interest will be paid from whose pocket? From the other 2 partners' pocket or from firm's pocket? See, loan is given to the firm. Firm means what? All the partners put together. So whatever the firm is having the earning, from that only the interest expenditure will be paid out. He's got a point saying that, sir, A is a partner. He has given loan to firm which is managed by A, B, and C. So A is given the loan. So B and C only have to pay interest. No. He's given the loan to whom? Not B and C. He's given to the firm. So firm here represents whom? A, B, C all put together. So everybody is collectively responsible to give it to whom?
A also is responsible to pay back to himself.
See, here it is no individual person. Here it is not ABC. It is firm now.
But it will go from A's pocket also.
Yeah, it will go from his share of pocket also. Yes. So here firm will treat A as a third party. That is why loan has been given. Getting this point? Wonderful. Yes.
Partner to firm is not applicable.
Partner to firm. Let's say partner to firm. Firm to partner. Firm to partner. Let's say firm is given loan to partner. And interest rate is orally agreed or not mentioned anywhere. Then no interest. That 6% is only in the case where loan is given by partner to the firm. So this you have to be very careful. 6th one.
Sir.
Yes, boss.
Sir, if agreed that the firm will pay back the partner, then it is possible, no, sir, that the partner will get the money back.
No, which you're talking about loan amount.
Yes, sir. When
Loan
partner
they will get
provides.
back. Loan is not denial. Here the concept, here the point is with regard to interest.
Okay. So it's interest only, sir.
Interest. Okay. What is your query? Rephrase it your query properly.
So yes, sir. So if the firm is providing loan to the partner, sir.
Guys, please. If firm is providing loan to the partner, okay.
Yes, sir. Then the partner will get the agreed rate of interest, sir.
Partner
if
has to
agreed.
pay the agreed rate to the firm, no? Firm,
So yes, sir.
firm is giving loan to partner. Partner has to pay interest.
Okay, sir. Okay, sir. If
Whatever
agreed,
rate
if
is
not
agreed,
agreed,
that rate. If no rate
so,
is agreed, 0%.
Okay, sir. Okay, sir.
Wonderful. Now,
Yes, sir. Thank you, sir.
guys,
Yes, sir.
guys, just let me complete this point. I'll come back. Just give me some time. A partner has right to take decisions in the interest of the business. A partner has right to take the decisions in the interest of the business. So if it is for the goodness of the business or it is for the development of the business, if you have any idea, you can consult with the partners and make a decision in the favor of the organization. Here they're trying to tell that is sometime in the interest of the business, you have to make certain decisions. In that position, if you are not in position to consult with the other partners, still if you have to take the decision for the goodness of the business, you are allowed to do that. See, there is some emergency situation where immediately today I have to make a decision. The other two partners are not reachable. So will I wait for them to consult? So as a partner, I have a right to make a decision. Of course, I'll consult with other two partners. But in today's scenario, there is something where I have to take an on-spot decision for the betterment of the firm. That time I cannot say that, no, why didn't you consult me? So if it is in the favor of the business, you can make a decision and implement it. That is what the point they're trying to say. Yes.
How is this different from the first?
Which one? First point says that you cannot make the decision left, right, and center all the time. Here, the second point they're telling is that whatever decisions you're making, you have to consult and make the decisions or implement the decisions. Second point is coming from that viewpoint where they're telling that you make a decision. If the opposite person is not available for consulting, you make a decision and implement it. Nothing wrong. Now, the second point ki baat, why this point is mentioned is because if 6 point is not mentioned, then there'll be a confusion that every time I have to make a decision, I have to consult. What if the person is not available? To protect against that, the 6 point is introduced. Now clear, Surya? Okay. 7th one, a partner has right not to allow the admission of a new partner. So normally, if nothing is mentioned in the agreement, if anybody wants to introduce a new partner, you have to ensure that all the partners agree to it. Let's say A, B, C are 3 partners. C want to introduce his friend D as a new partner. He cannot just introduce directly. He has to ensure that he gets approval from A and B. He has to get consent from A and B as well. So you cannot allow any partner into the business without consulting the other partner. But let's suppose while ABC were forming the partnership, exclusive power is given to C, saying that C, you have right to admit any partner you want. You need not consult A and B. Like that, the point is mentioned, and to which A and B are also signing. In that case, C doesn't have to consult A and B because he's got the sole authority. But in case if this point is not mentioned, if it is a general clause, then every partner has to be consulted before taking a new partner. Makes sense, no? Because if that point is not there, anybody will take anybody, and there'll be a chaos in the business.
What if the situation is majority and minority?
Still not possible. Now, Bhavyansh is asking, sir, let's say A, B, C, 3 partners. B and C wants to take a new partner inside. A is not allowing. So majority is saying yes, minority is saying no. So can majority win here? No. Partnership Act very clearly says that all the 3 agrees means you have to take it, or else you cannot take it. Last one. After giving notice, a partner has right to retire from the firm. As a partner, A, B, and C, let's suppose A doesn't want to continue the business because B and C are behaving one-sided with A. What will A do in that business? He will get harassed. So he'll give a notice and tell you that you guys continue business. I am retiring and going in my path.
Will the partnership dissolve?
Now here the question that comes is, sir, if A retires, B and C are the 2 remaining partners. So will the business close or dissolve? That depends. That depends what is mentioned in agreement. If nothing is mentioned in the agreement, then B and C can continue. Or in the agreement, if it's specifically mentioned that upon death of a partner or a retirement of a partner, upon a death of a partner, retirement of the partner, the business has to be compulsory dissolved. Like that, if it is mentioned, it will be dissolved.
If we have a new agreement.
Yes. Dissolved means what? Not new agreement. Dissolved means you have to close this new firm. You have to close everything and form everything afresh. So on the contrary, what is best, whenever you create a partnership deed, you mention a clause saying that if any partner retires or dies, the business will continue as it is. Like that, if you put a clause, it is safeguarded. Because see, closing an established business and starting afresh, it's a big headache. So always having all the contracting points in the document is safer. Or else if one point here and there is missed, no, gone. That's why people we tell, go to a proper, authority, let's say a lawyer or a CA or a CS who's got a proper knowledge of these things, so that every point needs to get captured. I've seen a lot of cases where initially, when there is a josh to start the business, people ignore all this aspect and start the business. Later, when there is a fighting between the partners, all these points will be a pain point in the later stage. So it is always better we have everything in writing and pakka all the points to be covered. Yes, Meg.
Say ABC are partners. E and C retire together. Yes, ma'am.
ABC are partners. Meg is asking ABC are 3 partners. B and C retired. So 3 people, 2 people gone, 1 is there. Can 1 person run the partnership concern? How will you shift to sole proprietorship? PAN card is in partnership. How will it become sole proprietorship? Business has to dissolve. You have to close down the business.
Irrespective of, sir, if it's not mentioned on the deed or.
Okay, you know what is something? This is called as PAN card. You know what is PAN card? Permanent account number. Everybody, like once you attain a majority of age, 18, you compulsory have to have a PAN card. Now, all the sole proprietorship concern works on your individual PAN card. So let's suppose if Bhavyansh is starting as a sole proprietorship concern, the business ka PAN card will be Bhavyansh ka PAN card. But if you are forming, let's suppose HUF, LLP, partnership, company, it's separately called as artificial person. You remember golden rule? Personal, real, nominal account. In personal, we have natural personal account, artificial personal account. So who's that artificial personal account? Partnership, HUF, LLP, companies, all these are artificial person. Artificial person means what? These business organization have been given the status of being called as a person, but those are not natural person. Natural person means created by God. Artificial person means created by humans. So firm is an artificial person. So for a firm, there'll be a different PAN card on which the business has been registered. Now here, the firm name is, let's suppose, FFLA. The 3 partners A, B, and C. If B and C retire, A cannot run the partnership concern. Why? Because partnership means what? 2 or more people. So if only 1 person is there, A needs to ensure that he gets another partner to continue the firm. If not, A will have to close this business. FFLA under the partnership, he has to close. And he has to start the business name with an individual PAN card, that is A's PAN card. Yes.
So you can introduce some other person.
Yeah, if he's introducing, not a problem. If B and C retires and D is coming in, then 2 people are there. 2 people there means not a problem. But if you're not able to find that person, means you have to dissolve the business. Clear?
Sir, for introducing D, A wants to get the consultancy from B
Not
and C.
required. So here to introduce D, why should I get consultancy from B and C? Because B and C are themselves retiring.
Okay.
Why should I consult them? I am the person consulting with the continued partners. So A is the continued partner. So A has got the sole authority to make the decision to join D. But if B and C were retiring, they say, no, business has to dissolve. Like that, if the point agreed in the agreement, then A cannot continue with the new partner. You get my point? In the agreement, it is clearly mentioned. If partners say not to continue this business, if B and C are saying that not to continue the business, and that point is mentioned in agreement, exclusively mentioned, then A cannot add D and continue the business as it is. So if A wants to continue the business, he has to shut down this business operation and start with the new organization.
So
Yes, boss.
shut down business on paper.
Shut down business on paper. Yeah, you mean you will close all the PAN card, all the supporting evidence of that particular organization has to be closed down, and you have to start with new PAN card. FFLA you can continue, nothing wrong. Name can be continued. If B and C say no, name also cannot be used, and to which A agrees, then name cannot be used. If you go inside this, there's so many ifs and buts. That's why court of law is there, no? Why do we go to court of law? Because in law, everything is not clear. There is so much of permutation and combination. If this happens, what to do? If that happens, what to do? So to some extent, your act will support, your law will support. Beyond that, you have to go to the court of law and fight it. Yes, Mridula.
Can a written agreement be formed in the middle of the business? And can it be amended over
Yes,
that?
yes. So the question that Mridula is asking, sir, we have initially agreed a partnership terms and conditions. It is written. As the business proceeds, if we want to change the partnership deed, are we allowed? Yes. And that is what you'll be learning in the upcoming chapters. Change in profit sharing ratio, admission, retirement, death. In all these cases, you will see the partnership deed being cancelled. In place of that, a new partnership deed is being placed. So it is never that once you've created a partnership deed, the same will continue till we die. No. If business requires an amendment of the partnership deed terms and conditions, you can amend, provided everybody agrees.
Partnership deed can be formed whenever.
Yes. Partnership deed initially is formed at the time of formation of the firm. Amendment can happen from time to time basis.
So if we fail to make a written agreement during the formation of a firm, does it mean that can we never do a...
Okay, Mridula asking, sir, when the firm is created, that time everything was orally agreed. Orally agreed. But as we proceed, if you want to implement in partnership deed, then you can implement it. But before having a partnership deed, if you have everything orally, then it is a problematic point. So it is not advisable and you will never see that situation. But with oral agreement also, people start the partnership. Simple kana. If you want to start a firm, what is required? You should have a name. First of all, you should have this document, partnership deed. Based on this partnership deed, you will apply PAN card. Based on PAN card, you will get the bank account. These 3 documents are enough for you to start the business. Nothing is required. Very simple. In companies, you will study. We'll see the format and process of starting companies. Heavy process. Heavy process. Here, partnership, chiller process. That's why any Tom, Dick and Harry starts partnership. That's a different story that their love story doesn't stand long, but that's how it is. Yeah.
So,
No, not at all.
also, can you just go to something?
I'm coming. No, I'm just taking few minutes. Yes, online people, just give me some time. I'll just finish off this part very quickly. There's too much of theory for me also. It is boring. Now, very quickly, agreement either oral or written. Agreement can be either oral or written. There is no compulsion that it has to be in writing. It can be oral or written. It is always better to have it in writing so that you can avoid any disputes. The written document is called as partnership deed. If you have an agreement in writing, it is called as a partnership deed. Now, this theory, what you're saying to skip Harshad, abhi ke liye, this theory is setting the flow. You know, in 11th standard, I made a norm to ensure to cover only that much theory in the beginning, which is enough for you to start the practical. The rest of the theory you will not believe. We did as and when we did the 11 chapters, and few we did at the end only. Correct, no? So you believe in that process. So this theory is like you have to do it so that the rest of the things you can understand in the future. That's why I'm not skipping this. Am I justified?
Yeah.
Fantastic. Now, it is a legal document signed by all the partners. And normally it has the following clause. So in the partnership agreement, what all of the points that has to be covered, they have given these points. It doesn't mean that these are the only points. If you want to add up any points, you can write any n number of points you want. These are the few points they have given for your knowledge purpose. Now in exam, you can get a theory question telling that please mention few contents of partnership deed. So if it is a 1 mark question, you will mention 2 contents, half mark each. If it is a 2 mark, they will mention 4. Because in one of the sample papers, I've seen a question specifically being asked, please mention, like they've asked, what is the meaning of partnership deed? So partnership deed means you have to tell that this is an agreement which is in the written form. Like that, you have to give one-liner explanation for what is partnership deed. And you have to give 4 items of contents of partnership deed. So this is there in one of the sample paper. Now, what is the first item? Description of a partner. So in the agreement, you will see, you will mention that this particular person is going to be a partner. So his name will be there. His Aadhaar card number, his PAN card number, his father's number will be description. Description means what? His Aadhaar, PAN and father's name and address of the partner. So these 3 information has to be compulsory be mentioned. Point number 1, description of partner. Second is description of the firm. What is the name of the firm that you want to propose? Fortune's Fund Learning Academy is the name. So that name has to be given. And the address of the firm. This is situated on which all address? Principal place of business. Now let's suppose FFLA is having 10 offices across India. Now out of these 10 offices, which is the main office, head office, principal office you have to mention. Because if there is any dispute, if government of that particular state or central government wants to send any notice to you, to which office should I send? So give me the address of the principal place of business. That is head office address. So address and the principal place of business. So here FFLA is the head office. Sorry, Coimbatore is the head office for FFLA. So Coimbatore address I'll get. Nature of business. Nature of business that the firm shall carry. So what are all the type of business that I want to carry in this FFLA? That is coaching center is there. So that will take care of all kinds of coaching center, coaching options. 9, 10, 11, 12, CA, CMA, CCA, CFA, everything will come inside that. Apart from that, let's suppose if I want to start a small cafe outside the premises, then that also you need to capture. So whatever business you're planning to do under this banner, you have to mention that very clearly in this particular clause. Any problem? Online people? Yes.
Sir, if this is oral, then how will
This is not oral, no. This is the contents of partnership deed. This is the content of partnership deed. So this is the writing format. Commencement of the partnership. On which date? Basically, this is nothing but date of birth of the firm. When did you create this partnership organization? What is the date of birth? So date of commencement of partnership. Basically, the date of birth of the firm. Capital contribution. The amount of capital contributed by each partner. How much is A contributing? How much is B contributing? How much is C contributing? That has to be absolutely clearly mentioned in the partnership deed. A is contributing 5 lakh, B is contributing 2 lakh, C is contributing 10 lakhs. You have to mention it. And whether the capital accounts is fixed or fluctuating. Now this you will understand when you do a practical question. You have to mention that the capital accounts what you are maintaining is fixed or it is going to be fluctuating. Now what is fixed, what is fluctuating? We have a practical question based on that. So now I'll not explain in detail. Interest on capital. Interest on capital, there's a separate concept I'll be discussing in detail. I'll not be touching that now. Interest on drawing, separate concept. Lot of practical questions based on this, so I'm not touching that now. Next point you'll mention is profit sharing ratio. What is the ratio in which you want to share your profits and losses? You have to agree upon. Now let's suppose this point you forgot to mention. That is, you forgot to mention this point. In that case, Indian Partnership Act 1932 says that in the absence of partnership deed, that is, this partnership deed is not there, or partnership deed is there, but you forgot to mention this clause. In that case, the profit sharing ratio will be equal. Equal means what? Not 50-50. If there are 3 partners, 1:1:1. If there are 4 partners, 1:1:1:1. That percentage will be different values. So that's why I tell don't tell 50-50. We will not be discussing in percentage terms. We'll be discussing in the ratio terms. Interest on loan. Rate of interest on loan by partner. The loan that is given by partner to the firm. And loan is given by the firm to the partner. Both the ways. Loan given by partner to the firm. Loan given by firm to the partner. You have to capture the data in the deed. Telling that if at all in future, loan is given by either parties, what would be the interest? That interest percentage, you have to capture it here. Are you able to follow? Now, in this case, if loan given by partner to the firm, here that interest point is not mentioned, then interest percentage is 6%. So let's suppose loan given to partner by the firm. Interest point is not mentioned.
0%.
0%. Are you clear with this point? Very good. Remuneration to the partners means what? Salary and commission. See, sometimes what happens is that A, B, C are all the 3 partners. Okay. All the 3 are active partners. But compared to B and C, A is doing a lot of work. He's doing a lot of work. So is it justified only to pay the profit sharing ratio to A alone? So A will say that, see, profit sharing ratio is for the business. But compared to both of you, I'm doing extra work. For that, I should be paid salary. Like that, A will demand. To which if B and C are agreeing, then ensure that the amount of salary what you're going to pay, that you capture in the partnership deed. Saying that A is doing this all extra activities. So for that, we are going to pay him 25,000 per month extra as salary. Like that, you have to mention that. Now, in case, if you forget to mention this point, if remuneration is not agreed, then no salary. We'll be discussing this point in the next page. Once again, let me complete. This is salary. Commission means what? See, sometimes what happens? B. Let's take an example of B. B is a person, who's in charge for getting, revenue. I mean, sales for the business. A, B, C, all 3 of them are responsible. But B is, taking more responsibility and he's working more hard to get more sales. So B will say that, see, if I have the potential to get more sales, But if you want me to get more sales, you need to pay me some extra commission so that I'll get motivated. So if B is working extra hard compared to A and C in terms of getting more and more sale, so B would prefer getting a commission. So in that case, if B has to be given commission, then that commission percentage or amount has to be captured in the agreement. If you don't capture in the agreement, no commission. So if any person wants salary or commission, what is he supposed to do? Get it documented with the absolute value and percentage in the deed. If not, he'll get this only. Next is valuation of goodwill. I'll discuss this point in the next chapter. Valuation of asset, again in the next chapter. Settlement of accounts. Settlement of next year. Yeah. Settlement of accounts. Settlement of account means what? If any partner retires or dies, so we have to pay that money to him now. You have to pay capital back to him. There'll be certain profits that is pending to be paid. So all the amount that is to be paid to the partner, in what manner you will calculate that? And how will you settle him? Upon the date of retirement, immediately full amount will you give in cash? Or will you give a check? Or at that point you will decide. Like that, whatever terms and conditions are there with regard to settlement, you have to agree all that point here itself. That in future, if so and so person retires or die, this is the procedure. We'll do step 1, step 2, step 3, step 4, and we'll only through this procedure we'll settle him. Like that, the settlement procedure has to be agreed, and the settlement procedure will go for several pages.
Nominee in case of death.
Same thing. Retirement and both.
Nominees.
Everything is mentioned in the settlement. Who will be the nominee? To whom we have to pay this money? What will be the mode of payment? Everything will be agreed in the settlement process. Settlement of account, here they have given very small line, but in reality, when you go and document, it goes for several pages. So the manner in which the account of partner shall be paid in case of his retirement and death, or at the time of dissolution, everything is captured in detail. Yes, boss. Yes. So even if ABC are 3 different partners, and if all the 3 wants a different settlement procedure, they can opt for, but practically nobody will agree. Because if you try to be indifferent in the beginning itself, then nobody will have that rapport. So generally, what I have seen so far in all my practical cases is that the settlement procedure is only one common procedure for all the partners. But if you if you wish to have a different procedure, then you have to get it captured. So anything that different you want to do, all you have to do is that get that information captured and documented in the partnership deed. Because if you go in court and fight, the first document that the judge will refer is partnership deed. Second document that he'll refer is partnership act. In the both these documents, if judge is not getting any information, then whatever he feels appropriate at that point of time, using his best judgment, he will give you the judgment. No, this is too much of a law class. No, let's come back to accounting. Accounting period. So you have to mention that what would be the accounting period. Normally in India, the accounting period is April to March. But if you wish to have on contrary a different accounting period, you are allowed to do so. In accounting, you are allowed to do so. In income tax, it is always April to March. So if you don't want to clash with income tax authority, you better go for April to March. Rights and duties of partners. Which partner has got what right? What right A is got, what right B is got, what right C is got. Exclusively get it documented. What is the duty of each and every partner? Exclusively get it documented. Because tomorrow if there is a dispute, judge will refer to this only. So everything has to be captured. What will Bhavyansh do? What he should not do? What Tanish will do? What he should not do? What right he has got? Everything has to be captured properly in the agreement. Next, duration of partnership. The period of partnership. Whether it is for a specified period. We discussed, no? Whether this partnership is for a specific period, let's say 5 years. Then mention that this partnership deed will survive for 5 years. Or if this partnership is for a venture, they'll mention that this partnership will run till the accomplishment of this venture. You have to define the accomplishment. For example, we took an example of what construction of apartments. So there the business is accomplished when upon selling the last apartment of the building. So if that is sold, the venture is accomplished. So that is a date when the business will be dissolved. So you have to mention the duration of partnership. Whether it is for a specified period, is it at a venture? Is it for a specific venture? If nothing is there, you don't know. We will run this business as long as we are in love with each other. The day we have breakup, The day we say breakup, we'll part away. So if that is the scenario, then you'll have the partnership at will. Yes. Yeah, going concern concept is still there. No, when you account it, you have to account from the going concern point of view. Correct. Still going concern is applicable. No, for example, you're telling that, sir, will run this business for 5 years. Then going concern is for 5 years. So you'll depreciate all the assets for 5 years. Going concern is means, see, very simple. Going concern concept says what? When you account in the business, you account it keeping in mind that business will run for a foreseeable future. Now here, the foreseeable future ends where? 5 years. So this will be the point. Now let's suppose the partnership is formed only for 1 year. Then here, the going concern is applicable only for 1 year. In that case, all the assets what you record, you will not take it to asset and depreciate. Everything will depreciate in the first year itself. Because the business is going to be there for only 1 year. There is no future usage of that asset. So you'll absorb all the amount in the first year itself. Am I clear? Now, bank account operation. ABC are 3 partners. Who is allowed to make the online transaction for payments? All the 3 partners has got the access or only one partner? You have to get it captured. In some cases, I have seen that if there are 3 partners, only one partner is being given the authority to operate the bank accounts, not everybody else. So if that is the case, mention who will operate. If you don't want to give the authority to any specific person, then mention that all the 3 will equally operate. But you have to mention that point, because if this point is not mentioned, in future there will be a problem. Next, death of a partner. Whether the firm will continue or not. You have to mention this point. Settlement of dispute. If there is any dispute argument happening in the organization, how those are planned to be addressed. The procedure for addressing the issues you have to mention. But the problem here is that you don't know what kind of disputes will come. So to whatever extent possible, you mention it. Beyond a point, you cannot settle the dispute. It will go to where? Court of laws only. So if you foresee that this could be the 5 dispute points, for that, this is the procedure for settlement. Like that you mentioned. If something is beyond your control, you'll go to the court and fight it. Am I clear? I'm not dealing too much in depth because this is sufficient. In the board examinations, I don't foresee in depth they will ask. They'll ask you very simple, what is a partnership deed? So one line point you have to write saying that if the terms and conditions of partnership are in writing, they are documented in writing, it is called as a partnership deed. That is one line meaning. They might ask you, write few examples of partnership deed ka content. Just give some 4-5 points, more than sufficient. So can we take a quick break of 5 minutes and we'll come back and continue. Online people, is that okay?
Yes, sir.
I remember somebody called in between for doubt. Don't worry. Once we resume from break, I'll take up your doubt. Thank you. Yes, people. So let's continue. Very, very important point that we are discussing now from the examination point of view. Very, very important. Take a highlight and highlight this point. Provision affecting the accounting treatment in the absence of partnership deed. Highly important. 100%. One question will be touched from this segment. 100%. Every year it is happening. Listen to me very carefully. In the absence of partnership deed. In the absence of partnership deed, which means what? Agreement is not in writing. Oral. Partnership deed illa. Or where partnership deed is there, but it does not have a clause, which means what? Agreement is there in writing, but they forgot to mention one particular point. In that case, the following provisions of Indian Partnership Act 1932 will apply. The first point. Interest on loans or advances given by the partner to the firm. Loan by partner to the firm. So what they're telling is that partner has given loan to the firm. First thing is they have forgot to mention the point in the partnership deed. How much interest to be paid by the firm to the partner, they forgot to mention that percentage. Or the partnership deed itself they did not create. In that case, will firm pay interest or not? If yes, what is the percentage? So this point is something which you already discussed in the rights of the partnership. So interest on loan by partner is paid allowed at the rate of 6% per annum. In other words, listen to me very carefully. In the absence of partnership deed, or partnership deed is there, but clause with respect to interest on loan given by partner is missing. In that case, the firm cannot say, I will not pay interest. Just because the percentage is not agreed, you cannot say, firm, I will not pay karke, firm cannot say. Right is given by the Indian Partnership Act 1932. Law says that firm, you have to pay interest. The rate will be 6%. So interest on loan by partner is paid or allowed at the rate of 6% in the absence of partnership deed. If partnership deed is saying 10%, then pay 10%. If partnership deed says pay 50% partnership interest, pay. But if nothing is mentioned, 6%. Interest on loan by a partner is a charge against profit. Now, what is a charge against profit? We have discussed this in 11th standard. What is charge against profit? Charge against profit, appropriation of profit. These two terms are discussed in 11th standard.
Against profit or charges?
Wonderful. Against the profit, charge is created. Charge against profit.
It is taken.
Okay, wait, online people. Let's hear from online people. Online people. Shh, wait, online.
It's deducted from the profit.
Wonderful. So Hariharan says that, sir, it is an item that is deducted from profit. So from profit, what will be minus? Expenditure. So any expenditure which you have to record, whether there is sufficient profit or not, that is called as charge against profit. I repeat one more time, very, very important. If you miss this out, gone. Charge against profit. Charge means what? To record something against profit. So what is against profit? Expenditure or loss. So if any item in accounts is treated as charge against profit, means you will record that expenditure in the books, which means you will not bother whether the profit is available or not available. I repeat one more time. You treat any item as a charge means you will record it at any cost in the trading account as expenditure or loss. You will not bother whether by recording this expenditure or loss, whether the profit is converting into loss or profit is reducing, you will not be bothered. So if something is charged against profit, you will be not bothering about whether the profit is available or not available. You will record it. That is called as charge against profit. Am I clear? I'll be discussing this about again in probably next class. So interest on loan, the nature is what? Expenditure, and it is a charge against profit, which means that let's suppose if the business is in loss, just because the business is in loss, can we say that interest on loan let's not record as expenditure? Not possible, because this is a charge against profit. You have to record it irrespective of whether you have the profit or losses. When you treat some item as charge against profit, you have to record it. You have to record it irrespective of whether the business is into profit or is into loss.
So,
Once again, ma. So interest on loan by partner is a charge against profit. It means that interest is paid whether the firm earns profit or incurs loss. Yes, Bhavyansh.
So if it is incurring loss, then it will attack the liability of the person.
If it is incurring loss, by recording interest, the loss will be more. How does liability come into picture? Liability aspect is different. Correct. That is loan. We are talking about interest only. Interest is expenditure. So already the firm is into loss of 10 lakh rupees. Interest is 1 lakh. So by recording this 1 lakh interest, the loss will become further 11 lakh. So you will not bother whether the loss is increased or not. You have to record means you have to record. Second point. Yes, boss.
Sir, an interest loan advance by a partner, if it is in the form of an oral agreement saying it's 10% and the provision says 6%, because it's an oral agreement, what would be the charge?
Oral agreement, where is the proof?
So then what is the point of saying an agreement can be oral or written when it's not?
That is the problem. That's why here, what are they saying? To avoid dispute, it is better to have it in writing.
What if it's recorded, the oral agreement or something
Oral
like that?
record. Oral record ho gaya, it becomes the partnership deed itself. Now, if anything is there in the evidence form, then that becomes agreement in writing. Correct, no?
No, what if a meeting where the oral this thing was recorded or something like that?
Sorry?
Like maybe there was a meeting or something where they discussed the oral agreement and they recorded that meeting or something like
As
that.
long as you can record and prove it,
It's fine, even if it's oral
then
then.
10% you take and go.
Even if it's oral, it's fine then.
But oral, how will you prove?
Abhi recording, right?
Audio recording, theek hai. Because oral, if you can prove in the court of law, you'll get 10%. See,
Okay.
here what are they telling? No, but wait, here what are they telling? In the absence of partnership deed, So one deed is missing, or whether where it does not have a clause. Partnership deed is there, but in that clause is missing. So now you're telling that, sir, if the oral is recorded, the evidence is there in form of voice. Now, will that be acceptable or not?
It will.
Okay, you guys decided. Okay, let's read the language again one more time. In the absence of partnership deed means what? It has to be in writing. So this is first point. Or second point says that where it does not have a clause in respect of that matter, where it does not have a clause, which means what? Deed is there. But in that, they have forgot to mention about the clause here. So anywhere have they mentioned a point about the oral agreement here?
No.
So what is the requirement? It has to be in writing. It has to be in writing. So they're focusing on partnership deed. So here your voice recording will not be considered, is my point. Nishka, am I clear?
Okay.
Next one. Sharing of profit bar losses. Profit bar losses, that is in the partnership deed, you have forgot to mention about the profit sharing ratio, or partnership deed is there. I mean, partnership, okay, first point is partnership deed is not there. To distract Kareem. Partnership deed is not even there. First point. Or partnership deed is there, but in that you forgot to mention about the profit sharing ratio. In that case, it will be equal. 2 points clear. Third one, interest on capital. So interest on capital, I'll give you a rough idea. So this is a partner and this is a firm. Okay. All of you know that owner gives a portion of money as capital to the firm so that the business can start. Now what happens is that this partner will demand interest on capital. Why? Because this partner says that had I given this money not to the firm as capital, instead had I invested this elsewhere, I would have got some percentage of income. Now just because I'm giving the money here as capital to the business, just because I'm giving capital to the business, I am losing the opportunity of earning that income. So the partner starts crying. The partner starts crying. So to console this particular partner, firm will pay interest on capital to the partner. Because the capital what you introduce in the business, right from day one, you will reap profits. Can you surely promise that? Some business will go on for losses for first 2-3 years. So this partner will get nothing. So will he not be demotivated? So to motivate him or encourage him, we tell that, okay, you take some interest so that, your mind will not be so much bothered. So by that virtue, firm will pay interest on the capital. So capital given by whom? Partner to the firm. So in return to satisfy him, we pay interest. So interest on capital. Now partnership deed itself is not there, or partnership deed is there. But in that, what will be the percentage you forgot to capture? You forgot to mention. In that case, will the firm pay interest to the partner? Question number 1. If yes, what is the percentage?
Not paid.
6% is only for interest on partner's loan.
So not paid.
Here, interest will not be paid and allowed. That 6% is only for interest on loan. Which loan? Loan given by partner to the firm. Hello, online people? Clear, not clear?
Yes, sir.
Yes, sir.
Interest on drawing. Again, this is an in-depth concept. I'm not discussing here. This basically you can understand in simple language. You have to tell. This is the firm. This is the partner. Sometimes it so happens that the partner might be in urgent need of money. So he will withdraw the money from the firm. Other partners will also say, no problem. You have a problem, so you withdraw. Now, one time you allow, no, this guy will come every time asking for money. So to discourage person to unwantedly withdraw the money from the business, we will compel the partner to pay interest on the money withdrawn. Or else if this interest component is not levied, then everybody will start withdrawing the money from the business. If money is kept on withdrawn from the business, if money is not deployed in the business development, how will business grow? My question is clear or not clear? If every partner give their personal excuses and keep on withdrawing the money from the business, the money which is meant to be deployed in the business for the development of the business, where will the development happen? So what they will do is they will lay interest on that. So let's suppose A, B, C are 3 partners, and if C is withdrawing the money, to discourage C to withdraw money, interest is being charged. In other words, if interest is charged, A and B will be motivated to pay what? That money to Partner. Firm is giving money to the partner. So if interest is coming, interest is being given to whom? Interest is being given to firm. By whom? Partner. Partner is giving interest to firm. So it is income for the firm. So if some income, extra income is coming, the other two partners should be happy now. So now they're telling that partnership deed is absent or partnership deed is there, but they forgot to mention what will be the interest on drawing percentage. Now in that case, can we ask the partner to pay interest? If yes, how much percentage?
No, we
Not applicable, no interest.
So where does this interest come from?
Interest will come from partner to the firm. No?
Yeah.
Partner has to pay interest.
From where? Which source of
Partner will have his personal source. No,
he does not?
if he does not have, then he has to. Okay, now let's say partner does not have any other source of income. So this guy has to pay interest. So in future, whenever the partner will withdraw profit, from the profit he'll pay back to the business. Some way or the other, you have to pay it back. Only people are able to get this point.
Yes, sir.
Point 1, 2, 3,
Yes, sir.
3 doubts. Please ask me. Once, one.
Can,
Yeah.
sir,
Yes, boss.
can you explain for me first one, sir?
First one, interest on advance.
Sir, yes, sir.
Okay, what is the doubt in that question?
Sir, in that second,
Charge against profit.
sir, yes, sir.
Very simple. Charge against profit means what? Any expenditure that you have to record. Okay, I'll explain Tamil. Others, you understood, no?
Yes.
Okay. Sarthi, I'll explain Tamil. Is it okay?
Sir, okay, sir.
Okay. Now, business la vandu oru sila expenditure நீங்க record பண்றீங்க.
Okay, sir.
அந்த எக்ஸ்பென்ஸ் ரெக்கார்ட் பண்ணும்போது அந்த ப்ராஃபிட் கம்மியாகும் அல்லது லாஸ்ல இருக்கிற பிசினஸ் லாஸ் அதிகமாயிடுச்சுன்னா அந்த செலவு கட்டாயமா ரெக்கார்ட் பண்ணக்கூடிய ஒரு டேர்ம் தான் சார்ஜ் அகைன்ஸ்ட் ப்ராஃபிட். இன் அதர் வேர்ட்ஸ், நீங்க ஒரு எக்ஸ்பெண்டிச்சர் ரெக்கார்ட் பண்றீங்க.
Okay, sir.
ரெக்கார்ட் பண்றகாட்டி வந்து ப்ராஃபிட் இல்ல லாஸ்ல ஏதாவது மாற்றம் வந்ததுன்னா வந்தால் அப்படியே நீங்க வந்து ஸ்டில் இஃப் யூ ரெக்கார்டட் தட் இஸ் கால்ட் as charge against profit.
Okay.
So நீங்க வந்து இன்ட்ரெஸ்ட் ஆன் லோன் பாத்தீங்கன்னா it is a charge against profit. You have to record it. You have to record it whether the firm is in the profit or in the loss.
Okay, sir.
இப்போ ஃபார் எக்ஸாம்பிள் வந்து 10 லட்சம் ரூபாய் லாஸ்ல இருக்கேன் நான்.
Okay,
in
sir.
loss of 10 lakh rupees. சரியா?
சரி, sir.
Just 1 lakh rupees நான் ரெக்கார்ட் பண்ணுமா பண்ணக்கூடாதா?
Sir, பண்ணுங்க, sir.
பண்ணணும். ஏன்னா இது வந்து charge against profit உள்ள ஐட்டம். If this item 1 lakh is a charge against profit, you have to record whether the firm is into profit or loss. So here there is a loss of 10 lakh already. So 1 lakh
Okay.
interest, if I record further, the loss will become now 11 lakh. That is called as charge against profit. Clear?
Yes, sir.
Now, remuneration to the partner. Guys, salary and commission. Partnership deed is not there. Or partnership deed is there, but they forgot to mention how much salary and how much commission to the partner. That quantum is not mentioned. Now partner is asking what? Please give me salary.
No salary.
Will firm give? Not possible. If you want salary and commission, you should have got that documented in the deed. Failing which, not paid. Now, Tanish says, sir, initially when we started, we had agreement, but we did not mention anything about salary. But as we proceeded, out of A, B, and C, A is working very hard. Now, A is putting a proposal that, see, I'm working very hard. You have to pay me a salary. If they are only orally agreeing and leaving, and if firm does not pay, A cannot get that money. So if A really wants to get that salary, he should ensure and convince to create a partnership deed, new partnership deed. That is the revised partnership deed with the terms and conditions saying that, okay, A will get 25,000 as salary, A will get 30,000 as salary. He has to get the partnership deed amended in writing. Then he will get it. If not, he will not get it. Yes, it is possible.
Amended means changed.
Change it, update it.
So again, you have to draft.
So you will keep all the points as it is, and this point alone you will alter. Yes. Yeah. Admission of a partner. New partner cannot be admitted unless all partners agree. This point also be discussed.
Sir,
Provisions of Indian Partnership Act 1932. Section 30 says that. Okay, do we need to remember this section? Not required. If all partners agree, minor may be admitted for the benefit of the partnership. This also be discussed. Minor can be admitted for the benefit of the partnership. Additional condition is that all partners should agree. Second, section 31 says that a person may be admitted as a partner either with the consent of all the existing partners or in accordance with the agreement. What did I say? If you want to admit a new partner, everybody should agree. Or in the agreement, you say that C has got the authority, or C is only got the authority to admit a partner, means then C will only admit it. So that is as per the agreement you go. If nothing is captured exclusively in the agreement, then everybody has to be approving that. Third one, section 32. A partner may retire from the firm either with the consent of all the other partners or in accordance with the agreement. All the partners agree. That is, I am giving a notice saying that, okay, I am retiring from today, to which everybody has to agree. If agrees, you will retire. Or in the agreement, it is mentioned that you don't have to take approval from anybody. You give a notice and just get lost. Then you'll go and follow as per that. Yes, boss. See, to be more precise, this point I would say in a little twisted manner. If nothing is mentioned in the agreement, generally, you give a notice and retire. If you don't want a person to retire just by giving a notice, you have to mention that he has to get consent from all the partners. Actually, it has to be ulta. If a person want to retire, generally, if nothing is mentioned in the agreement, you give a notice and retire. Generally, if you want to leave the firm, nothing is mentioned in the partnership deal. You can give a notice and retire. But in that, what will be mentioned is that when you're retiring, you have to serve a notice period of 2 to 3 months. Why? Because in that 2 to 3 months, I have to find some other person, hand over the responsibilities. So generally, this is the procedure. So consent here means what? You have to give a notice period of some time. Consent here doesn't mean that if the other two partners are saying no, I will have to stay back. Nobody can compel me. Generally, I'm telling you, if the partnership deed, nothing is mentioned, you give a notice, you retire. The only condition is that you have to serve a notice period of 2 to 3 months, whatever is agreed in the deed. Or in accordance with the agreement means, in agreement, you would have stated that if somebody wants to retire, you have to follow this procedure. Then by following that procedure, you have to retire. So here, what is confusing all of you is that, what have they mentioned? A partner may retire from the firm either with the consent of all the partners or in accordance. So here it is may. Now, what did you read? You read that everybody has to give consent, only then the partner will retire. But with consent, there is a word called may. Now, I told you in 11th very clearly, there's a difference between may and shall. General Interpretation Act, there's a rule book where certain words, how you should interpret, law will tell. So that law is saying that may should be interpreted optional. May means wherever in the law, may is given, it means optional. Shall means compulsory. So here they're telling that a partner may retire with the consent of all partners. They did not say that the partner shall retire with the consent of all partners. Had they put the word here shall, that means that everybody else should approve his retirement. But here there is no word shall. Here the word is may. So if everybody agrees, you retire. If everybody doesn't agree, still you retire. Or as per the agreement, whatever is mentioned, as per that you retire. So if any point is specifically captured in the agreement, if there is any specific point, we will follow the specific point. If nothing is mentioned, you will go with the general rule. Now, this is the point, very, very important. Please make a note. Registration of the firm under the Partnership Act 1932 is optional, not compulsory. This point also we discussed. Unless otherwise agreed by the partners in the partnership deed, a firm is dissolved on the death of a partner. Very, very important point. Please make a note. I'll read this. Now listen to me very carefully. I'm reading this ulta. A firm is dissolved on the death of a partner. If a death is happening, if one of the partner dies, the firm has to dissolve, compulsory, unless otherwise agreed by the partner in the deed, which means what? Generally, if nothing is mentioned, partnership deed is absent or partnership deed is present, but you have forgot to mention a point about this. Now, a person has died. Should the business continue or dissolve? If nothing is mentioned, dissolve. If you don't want to dissolve, in the beginning itself, while the agreement is drafted, mention that if any of the partners die, still the business will continue. Like that, if you keep a clause, the business can survive. So very, very important points. Please mark it. Star mark, I'm putting it here for this. In fact, all these 5 points are very, very important. I would say that this, please take a highlighter and highlight this. Very, very important. All the 5 points are super duper important. Yes, Meg.
Employees be entitled to pay to the firm.
Yes.
Now, say suppose a partner not to the firm. Now, you want payment. Do the other partners compensate?
Okay, Meg is saying that partner has to pay interest on drawing to the firm. Partner dies. Who will pay? The nominee or the legal heir of the partner will pay.
Sir,
No nominee, no legal heirs, nothing is there means then go win the only. Nobody is there to pay, then what will we do? Yes, online people. Somebody call me.
sir, so on retirement of a partner, the business can continue, right?
Yes.
But on death, the business
That point is only for death. Yes, you are right.
unless mentioned in the partnership deed, the firm will dissolve.
If nothing is mentioned, if the act is like, if the law, if the partnership is just plain, nothing is mentioned means upon death dissolve. If you don't want to dissolve, you have to be more specific. But for retirement, this clause is not applicable. For retirement, even if somebody retires, the business will continue.
Yes.
Minor pay करेगा? नहीं करेगा. हाँ. Now, 2 points very important, which people tend to ignore. If a partner carries on business in competition with the firm, example, FFLA is a partnership concern. Okay. 12th Academy is my sole proprietorship concern. So FFLA does the coaching for 12. Pratik sir is running a sole proprietorship concern called as 12th Academy. There also is taking 12th. So can I say this and this will be competing with each other? So if any particular partner is doing any business which is competition to its firm, to his own firm, that's the right word, to his own firm. That is, I am one of the partners of FFLA. We are into coaching business of 12th. I am also opening a separate academy under my sole banner, 12th Academy. There also I am doing 12th ka coaching classes, teaching. So whatever profits that I earn from 12th Academy, everything will be given to whom? FFLA. Because you cannot have a competition among yourself. Because a partner is trying to compete with the firm. Is it right? If your own family members try to compete with you, is it right? So this is not allowed by any partner. Generally, it is not allowed. You will get a feeling of this when you do the business. Let's suppose all three of us are partner. Okay, I am a star accounting teacher, so you have taken me as a partner. So I am taking separately also. So if I take separately, so will people prefer to come here or prefer to come to me separately? Correct? Yeah, depends on the equation. So majority of the people, students are connected to me. So if I tell no, come under 12th Academy, because I will encourage them to come there only, no? Because if everybody come there, I'll be enjoying the full profit. Will you both like? No. Psychology, no. That's what. So if a partner carries on a business in competition with the firm without the consent of the other partners and earn the profit. Okay, now if here in this case, let's suppose Shruti and Nishant are saying, okay, sir, Pratik sir, you continue, no problem. Then no problem. But without their knowledge, if I'm continuing, without your both consent, if I'm continuing, then the profit earned from such business shall be paid to the firm. However, if any loss is incurred, that loss he will bear. Profit alone will come here. So if 12th Academy is incurring any profit, then they have to give that profit to FFLA. But if K is under loss, that loss they will itself bear. That is K itself will bear. If any losses, if any, borne by himself alone. Once again, let me finish this part. Second, if a partner earns profit for himself from any transaction of the firm or from the use of firm's property or business connection, the profit so earned shall be paid to the firm. Let's see point number 1. A partner, let's say me, I am earning some profit for myself from any transaction relating to firm. For example, I am constructing one more floor. So for that, I have to purchase building materials, bricks, sand, cement. The person from whom the firm is buying the bricks, sand, cement, I am dealing a contract with him telling that I will ensure that my firm gives the contract to you. To get this contract, you have to pay me 10% commission. Like that, if you do any transaction, the 10% commission, what I am getting, I have to give it to the firm. Let me give a diagrammatic representation. So this is firm, this is the building contractor, and this is the partner. This partner is going and telling the building contractor, see, look, this firm is going to do some construction. I will ensure that the firm will buy the materials from you. If you want me to get this contract to you, you have to pay me commission. So there is a transaction between the builder and the firm. From this transaction, if partner is profiting, then that 10% commission has to be paid to whom? Firm. Okay, not okay. If firm comes to know. If it doesn't comes to know, then nothing. In today's world, so many things is happening. Knowing and unknowing, various thing is happening. If it comes to know, then this point is there. If nothing is come to know, then what to do? Point number 2. Or from using the firm's property. Let's suppose this hall is there. I'm using this hall and making some private income. So that private income, I have to give it back to the firm. Are you clear with this point? Third, I'm using the business connection. That is, you are students of FFLA. I'm using you guys and doing some personal profits related to marketing. Who's that? He's known. Marketing. I'm doing marketing. I'm getting some extra students in my personal venture. That is wrong. So using any business connection, if I'm profiting myself, using any business connection, if I'm profiting myself, see, very simple, Kana. If you are a partner of any firm, you are the owner. So as an owner, you should ensure that the maximum benefit happens to firm. But if you're looking for a private benefit, which means the firm's benefit is not in place. So being an owner, if you don't benefit the firm, is it right? That is called as backstabbing and cheating. So to cut down that, whatever benefit you get from that backstabbing and cheating, you have to give it back to the firm. Very simple. Any problem here? Nishad, you had some doubt. Understood? Let's do illustration 1. Very important. Practical question starts from here. See, look, active. Everybody like, Now, online people all said, can we start?
Yes, sir.
Start,
Yes, sir.
Yes, sir.
Yes, sir.
What were you doing, sir? No break, no break. We have to finish 2 questions and we are done. We'll go home. Adi video, Abhishek video, Ananya video, Hari video, Hariharan video, Himanshu video, Prathik video. Please switch it on. Amar, Lalit, Charu are partners in a firm and they do not have a partnership deed. They do not have a partnership deed. They do not have a partnership deed. Means what? No written agreement. Now, first point. Amar had invested more capital than other partners. Amar is one partner who has invested more capital than other partners. And he is asking interest on capital at 10% per annum. But Lalit and Charu did not agree with him. So can I say Lalit and Charu are wrong?
Sir, Amar will not get the interest, sir.
Why?
Sir, because it's not recorded in the deed, sir.
You have to
Partnership
mention.
deed.
You have to, yes, you're
Yes.
right. You have to mention. As per the provisions of Indian Partnership Act 1932, as per the provision of Indian Partnership Act 1932, in the absence of partnership deed, interest on capital cannot be paid. Like that, you have to mention the law first. Then you'll conclude saying that, therefore, in this scenario, Amar will not get interest on capital from the firm because this was not documented in the partnership deed. Like that, you have to frame appropriately. The partners don't have a partnership deed. Therefore, the Indian Partnership Act 1932 will apply. So this is a common point. Interest on capital is not to be allowed to the partner. Therefore, Amar will not be allowed interest on capital. So this is a common point they mentioned. And under that, there is a specific point. Any problem? What happened? You heard this question? So nice. Numericals say wait. Numericals is there. Point number 5. Second point. Lalit is another partner. Devotes more time in handling the business. He's giving more time, more efforts, and demands a salary of 5,000 per month. But Amar and Charu did not agree. So is Amar and Charu right? Yes. Is Amar and Charu right, online people?
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
Lalit wants salary. He should have got it documented in the partnership deed, failing which he will not get. So remuneration is not payable to partner. Therefore, Lalit will not get salary. लिख लेते वही बोला मैं क्या ये लिखना है अच्छा वो लिख लेते you should be very specific. Third one, Charu demands interest on loan of 50,000. So basically Charu is demanding interest on loan. So Charu is given loan to firm or she has taken loan? Given loan, that's why she is demanding interest. Charu demands interest. So this is loan by partner to firm. Loan by Charu to firm. Or 50,000 is loan and she wants 12% interest.
So she'll get only 3,000, sir.
Okay, wait. Thamba. Now, first option. Charu will not get anything. How many of you say this point? Charu will not get anything, 0%. How many of you say? Purvi, Navya, 2 people. Online people, Charu will not get anything. Online people, anybody?
Sir, she'll get 3,000 rupees. Sir.
Not get anything. No, wait. Gone. So Purvi and Navya wrong. Okay, second option. How many of you say Charu will get full 12%? Nobody. How many of you say Charu will get only 6%? Offline, everybody is roasting. Online,
Sir, 6% is 3,000.
6%. So 6% of 50,000 is how much? 3,000 rupees. Practical question. Dekh le bhai. Hey, oh, hello. Practical. Interest on loan by partner is payable at 6% in the absence of partnership deed. Therefore, Charu will get 3,000 rupees. That is 50,000 into 6 by 100. Numericals. And not 12%. Whatever you get, you should be happy with that. You should not be over demanding.
The question you mentioned your agreement.
Then jitna kiye utna milega. Next point. Fourth one. Amar withdrew 10,000. Withdrew means what? Drawings. 10,000 from the firm for his personal use. Okay. Lalit and Charu demands interest on drawing 10%.
So don't need to pay, sir.
Online people.
No interest will be
No need to
provided.
pay.
No
Sir.
interest.
No interest.
Aditya,
No interest.
Dhanvant, Haricharan, Hariharan, Himanshu, Idika, Janani, guys, all of you, Saisha and all. Hello. Interest. Firm will get or not get?
Not get.
No.
Not get.
Not yet, sir.
If they want interest on drawing, what are they supposed to do? Get the percent
Partnership
mentioned in
deed.
the partnership deed. Yes. Make a partnership. Okay, make a partnership. Okay. That's the answer. Here. Interest on drawing by Amar will not be charged or will not be collected from Amar. Now, fifth one, practical question.
Yes, sir.
Profit for the year before the above claims. That is before above claims. Claims means what? Before minusing all the above. Before subtracting all the above was 50,000. Profit is 50,000 before subtracting the above 4 transactions. Amar demands a profit to be distributed in the capital ratio. In what ratio they gave capital? For example, Amar, Lalit and Charu, no? ALC. This guy gave 10 lakh capital. This guy gave 5 lakh capital. This guy gave 2 lakh capital. So what is the ratio? 10:5:2. So the partner, what is Amar? Amar demands the profit to be distributed in capital ratio. Is Amar right or wrong?
Wrong.
In the absence of profit sharing ratio, it has to be distributed
Equally.
So 1:1:1. So what will be the profit distribution? मैं वही बोलने वाला था. देख के चेप रहा है. Tell me, justify how? 50,000 you will distribute in 3 ratio. How many of you agree with this point? Now what I'm asking is, wait. What I'm asking is, fifth point, you said that, sir, profit will be distributed equally. Point taken. I am telling you what will be the profit to be distributed.
47.
So 16,666.
Online people, once again I'm coming to you.
The 3,000 on interest, the loan.
To dekha na answer? Okay, got it. Right, he's right. How do you know all the questions, sir? Internal. They have told very clearly, no? Profit for the year before the above claims, before subtracting above is 50,000. So I need to subtract all the above. But in that first case, I not subtract. First one is what? Interest on capital. Since partnership deed is not there, IOC is 0. Second point is what? Salary. Since partnership deed is not there, salary is also 0. Third is what? Interest on loan. What is interest on loan? 3,000 I need to minus. Fourth one is nothing. See, what is the question saying? Profit is 50,000 rupees. Before adjusting point number 1 to point number 4. Okay. Point number 1 was about interest on capital. Partnership deed is absent. In that case, interest on capital is not applicable. So will I minus interest on capital? Not possible.
No.
Point number 2 was what for? Salary. In the absence of partnership deed, will we pay salary? Surya, will you pay salary? No. So salary not payment. So can I say salary will not minus? Third point was what? Something nahi. Interest on loan. 3,000 rupees. We have to pay or not pay? Now, this 50,000 is before subtracting the 3,000. So can I subtract or not? Should I subtract or not? Yes. So minus 3,000. Now, fourth point was what? Interest on drawing. In the absence of partnership deed, interest on drawing is also not applicable. So that also I'll not add. Drawing is not profit item. Interest on drawing is the income. See, from profit, what will you add and minus? Income and expense you will add and minus. Drawing is not your income and expense. It's a cash item. You'll minus it from the cash balance, not from the profit. Correct, no? So from 50,000, if I minus 3,000 rupees, what is the net profit?
47.
47,000 rupees. So this you will distribute equally. So 47,000 is a divisible profit. Now, I don't expect all of you to become a pro here. Why? Because next class, I'll discuss P&L appropriation account, where all this item I'll be discussing in depth. So Harshit was asking practical question. No? So from here, it's only practical question. You will discuss permutation and combination of this. You will cry until that we'll discuss. Right? Now, sure. Let's see the point. Online people, did you get what did I just do?
Yes.
Everybody.
Yes, sir.
Okay, 17 people online, no response. Only 3-4 people responded. Not done.
Yes, sir.
Yes, sir.
Very good. So profit. Yes.
Subtracting 3,000 only, we are getting 50,000, no, sir. Then
No.
why are we again
But
subtracting?
how do you say no? Look at the language. Profit for the year before the above claims means before minusing the above was 50, na?
Oh, okay, sir.
So 3,000 is not yet subtracted, no?
Yes, sir. Yes.
So after subtracting, the profit is 47,000, which will be distributed equally. That is 1:1:1. Now, okay.
Okay, sir.
Fifth, sixth point. Lalit wants to introduce his son Inder as a partner. Charu objects. So, can Lalit introduce or not introduce?
No, sir.
Charu is objecting. Is
No,
Charu's
sir.
objection tenable or not tenable? It is tenable because in the partnership deed, it is very in the partnership law, it is very clearly mentioned. If the partnership deed is silent, in that case, you will admit a partner only if all the partners agree. If any one partners objected, you cannot add him as a partner. So partner cannot be admitted without the consent of all the partners. Therefore, Inder cannot be admitted as a partner because Charu has objected to it. Illustration 2 will be homework.
Sir, I have a doubt here.
Wait. Even I am hungry. Wait. 1 second. Who said they have doubt?
Me.
Okay. I'll take this doubt after the recording gets over. Is it fine?
Yeah, okay.
Okay. Or else if I take this doubt, everybody will kill me. Okay. So, listen. Today is what, Wednesday, no? Friday also we're meeting same time. Okay. Okay. So yes, people, that's all from mine for today's session. I'll see you all in the next class, 7 p.m. sharp. So 7 to 7:15. We'll do a recap. 7:15 sharp. We'll start with the new concept, new topic. So please do not miss it. Be on time. Right? So see you all in the next class. Until then, bye-bye. See you. Take care.